Welcome to the State and Local Government CRAM session dedicated to 4C of the CPA exam focused on state and local government accounting. So this section in your book is only approximately 6 pages, but it has a lot of useful information you need to be familiar with. And the biggest thing that this chapter is trying to focus on is that you have to take your governmental funds that are recorded as modified accrual accounting and bring them over to accrual-based accounting. Because we need to produce the government-wide financial statements. And there are 2 with those. If you remember correctly, we have the statement of net position and statement of activities. And they are reported on the government-wide financial statements as accrual-based accounting. And the governmental funds are not that way. And so the idea is that you have to be able to change and make the appropriate accounting entries to reflect that amount. So what do we have to change in order to make sure that it's reflected correctly? Well, think about anything that wouldn't be covered in modified accrual. And these items are covered in detail on 4C-1 and 4C-2. But I'm going to hit the highlights right here. Things you have to take into consideration are any type of fixed assets that would be longer than the current period that you're worried about. Same thing with long-term debts, anything with liabilities or revenues. All of these activities have to be reflected in accrual-based accounting, so you have to make the appropriate accounting entries. So if you have a debt and you have a payable on some sort of activity, you have to reflect that appropriately. And the one thing I do want to stress is that when you're done with the entries, you should not have any modified accrual accounting lingo or terminology in the accounting entries. So for example, the way I think of it is like when you prepare the closing entries of the income statement to go over to the balance sheet in a business. You remove all the temporary accounts and you roll them over to the permanent accounts. The way I think of this is that you are removing all the temporary accounts and you're moving them to the permanent accounts. Now, that doesn't mean that you lose sight of the governmental funds. I don't want to dissuade you with that. But the idea behind it is that you're making these accounting entries to properly reflect them on the financial statements. And you have to make sure that any of the encumbrance language, any of the expenditure language, any modified accrual language is gone. And so that being said, like I mentioned, all that goes into much more detail on 4C-1 and 4D-2. Now, one of the things I did want to highlight as I check off our list is that for the fiduciary funds, they are not included in the government-wide financial statements. We don't have resources to them, right? We just oversee them. They're not our monies. We invest them with someone else, and they are the ones responsible for it. And so therefore, they're not show up on those statements. And I want to highlight one other thing, is that for the internal service fund, where that shows up on the government-wide financial statements determines on who basically is the individuals or groups are being serviced. So usually an internal service fund is focused on the government itself. So for example, motor pool. In that case, that activity be rolled up into governmental activities. However, if the internal service fund, it helps the business type activities produce its business, then that activity would not be rolled up in the governmental activities. It all depends on who, and that's why I wrote it on the board behind me. Now, the last thing you need to be considerate of are the inter-fund transfers, and this is on the top of 4C-3. So on the governmental accounts, you will have transfers between the governmental funds. However, on the government-wide financial statements, those should not be reflected. What we don't want is double counting of that activity. And so you're going to close out those transfers appropriately and leave the funds where they are. So if there was a transfer from the general fund to the special revenue fund, for some reason, you want to reflect that the money's been transferred out of the general fund and transferred over to the special revenue fund. You don't want to have those accounting entries reflecting that completely there because there is the chance of misrepresentation of that information. Now let's go to the bottom of page 4C-3 and talk about the reconciliation of the total fund balances and the net change in fund balances reported in the governmental fund financial statements to the net position and change in net position reported in the government-wide financial statements. GASB requires that a reconciliation of the governmental funds to the government-wide financial statements appears either on the same page as the governmental fund statement or the page immediately following. And so with that, you have to make sure that it's there for people can see. And if we go to page 4C-4, you're going to get a number of examples of how we go about preparing that reconciliation. I'm only going to touch on one because this is a CRAM session, but the idea is, for example, if you have general government capital assets, how it should be reported on the government-wide statement of net position. You should have capital assets net of accumulated depreciation. What do you do with your governmental fund balances? You want to add the value of the capital assets. Now, for this chart, I would suggest you not memorize it. I would suggest that you're just familiar with it because it helps you during that reconciliation process. If you go to page 4C-5, we're going to do the same thing except converting the financial statements for the equivalent of the income statement, statement of activities, over to statement of revenues, expenditures, and changes in fund balance over to the statement of activities. And so that being said, we'll go over one activity. The transaction you have is a capital outlay. You want to take out the capital expenditures which are incurred for acquiring or constructing of capital assets, so you add in your capitalized expenditures. Once again, I highly suggest that you're familiar with this, but that being said, don't waste the time to memorize this because you just need to be familiar with it. You have to pick a place to memorize something, you need to go to 4C-6. And I apologize for my cough. These are common accounting entries that convert the modified accrual items over to accrual basis of accounting. And so, for example, if you start off with property, plant, and equipment of the capital outlays expenditure and the credit for vouchers payable, you need to make an accounting entry that reflects a debit to property, plant, and equipment and a credit to capital outlays expenditures. Right? If you have a long-term debt issuance and you have a debit of cash and a credit to other financial sources, bond proceeds, you want to eliminate the other financial sources bond proceeds by a debit to that and a credit to bonds payable. If you have a debt principal payment and the original item is an expenditure, bond principal as a debit and a credit, bond matured principal payable, you want to remove the expenditure of the bond principal retirement by crediting that account and debiting the bonds payable. And the bond interest payments, you want to debit the original entry is the expenditure of a bond interest and a credit to cash. The way you resolve that is you want to debit interest expense and credit the expenditure bond interest. At the end of the day, what you don't want to see is any terminology that would be an encumbrance accounting or expenditures or things like that that would show up in modified accrual. You can see vouchers payable, but that being said, you don't want to see any of those other terms because once again, you're closing out those entries. And so therefore, that being said, you don't want them showing up anywhere else on the statements as a whole. If you had to pick a place to spend some time in this section, I would pick page 4C-6 to learn the accounting entries and then learn the general gist of the items that you have to reconcile. You have to address fixed assets, long-term debts, liabilities, revenues, and make sure to know what the fiduciary funds go to, what the proprietary funds go to, and the interfund transfers and how to do that as well. That being said, I appreciate you taking time out of your day to spend with me. Have a great day and good luck.